Yeah, just go
All
for it.
right. Well, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about Carnival Cruise Line a little bit. I want to do an enterprise value adjustment based on the previous year and kind of where they're at now in comparison. I know both Dylan and I made a little bit of money on Carnival Cruise Line last year. You don't hold any currently, right, Dylan?
No, I think I sold my last shares at
Yeah.
23, which was a bummer. I bought it at 18. I could
Yeah.
have held it longer.
Nice, nice. I own a tiny bit still, very, very tiny bit, but in comparison to what I did last year at one point. But either way, it's interesting when you actually go through the numbers now. So
I was a big fan of this for a long time, but now I think it's too high.
yeah, it's overplayed a little bit. So this is a 5-year chart of CCL, and if you notice, prior to the COVID pandemic, which is obviously like this lovely little graph right here, but they were in a downtrend. They were experiencing difficulties with little margin contraction, meaning like they were earning less and less profit based on their revenue for the previous couple of years as competition in the cruise industry kind of heated up a little bit. So it was already a struggling industry. It's a lot of debt burden they need to take on to finance these ships. So they're not exactly the cash money machine of companies out there prior to the whole COVID-19 pandemic. And then obviously this lovely bar right here is the last March, the sell off there.
Yeah, now they're
Yeah.
kind of the opposite of a cash money machine.
Yeah, exactly. And then now since cruise ships haven't really sailed since then, right? How they've been financing themselves over this time period here, right? And they, this is their revenue, as you can see, fell off completely, basically. They're starting to see some signs
Yikes.
of life, some bookings and things like that coming back, but they're not sailing still.
Right.
Yeah. So this is how they've been financing themselves. Debt. They've issued quite a substantial amount of debt over the last year. And, depending on the time when they issued it, this isn't like a 3% mortgage that they took out. Some of these loans were taken out on rather onerous conditions.
Not a 3% mortgage.
Yeah, exactly. I think the first one they took out was at 11.5% interest rate. Yeah, exactly. Nice $4 billion in your credit card.
Oh my gosh.
And this debt is convertible too, right? Like, so they can convert this debt into shares. It was a little complicated in terms of the rules around that, but the price at which they could convert it was like $10 a share, which is pretty phenomenal.
I didn't know there was 11%.
Yeah, it's 11.5%. Yeah, and then the second loan that they took out was at 7.5, and then the most recent one was at 5.75. So better, but still, none of those are the kind of rates you'd ideally want to be borrowing billions of dollars at. The other thing that they did too is they issued shares. So they've sold out, created more shares and diluted the current ownership in order to continue financing themselves. I completely understand they had to do it to survive. The world was a pretty unknown place, but I want to compare, the Carnival of pre-COVID to the current Carnival Cruise Line company, and see if we can get some use these numbers to kind of get a reasonable price. So, if you ever encounter this enterprise value formula here, basically, it's equivalent. Imagine you buy a home, right? Like, so if you buy a home, this equity value is going to be, your ownership stake of the home, and then the debt is the mortgage you actually take out, and if you had any cash tied up in the property, basically. So this is based on the 2019 end of fiscal year, which is November 30th, 2019. Carnival Cruise Line had $9.7 billion in debt, a little bit of short-term cash borrowings, $518 million in cash. They were selling at that point for about $45 a share, and 692 million shares outstanding. So if you do the enterprise value calculation, it comes out to $40.5 billion, basically, right? Sailing along nice and fine there. Now, 2020, entirely different year for Carnival Cruise Line, right? A little bit of a dumpster fire. So they took out $22 billion in debt. So they more than doubled their debt. They also had to take out some short-term borrowings. Now, the good news is that they had significantly more cash, right? They have $9 billion more sitting in the bank account at their current burn rate of about $600 million per month with their cruise ships kind of mothballed. This would get them through the rest of 2021, which hopefully they're not going to have to do based on just cash, but still. So closing price in the market this past Friday, March 19th, was $28.96 a share. They've issued this 735 million shares outstanding is actually based on the end of their 2020 fiscal year, which was November 30th. They've had one more share offering since then. So it's even actually a little bit worse than this, basically. But if you do the enterprise value calculation based on these numbers at the end of November, but with today's stock price, you're looking at a $38 billion enterprise value, right? So comparison between 2019 and 2020 here, we're looking at a 40.8 versus $38.1 billion enterprise value, meaning Carnival Cruise Line is currently at like a 7% discount, and that's excluding this most recent share offering. So yeah, it's not a deal anywhere even approaching a reasonable sale. I mean, there have been better discounts than this on any website retailer you go on to, right? And there is still quite a bit of risk because they still don't know. They're planning on sailing this June, but that's a hell of a price to be paying right now for a company that has that much uncertainty. And you look at their debt to EBITDA ratio. They're 4 years of their income in debt right now. I mean, better than the U.S. government, but still. So, basically, if you simply look at share price, you're looking at this day right here. Basically, was the last day of that 2019 fiscal year compared to this past Friday. You're thinking, there's still room to run there. There's 30-40% difference in price. In reality, once you adjust for the amount of debt and the number of the shares that have been issued and diluted, it's actually only 7% is the difference there. So I will be selling what I have left in Carnival Cruise Line stock. Not, like I said, not very much of it, but it is time to get out and move on to something else that doesn't represent such a steep price to pay for a company that has such a long road to the future.
Yeah, I'm not gonna lie. I muted myself on accident. So if you saw my mouth moving, that's my bad. And then my headphones disconnected. So I was trying to fix this, but just to reiterate, so February 22nd, they just had another 41 million share offering. November, they had a 65 million. In April, like right after the pandemic, they offered like 62 million shares at $8. At $8. So Finviz has their like outstanding share at like 900 or something. Yours is probably more accurate than Finviz because yours was.
Well, mine is pulled from November 30th, 2020, which was their most recent annual report. There's been one share offering since then. That one that
that was another 65 million.
Yeah. So it's it's definitely a steep price to pay.
When you add all that up, it's just I would even say it's overvalued right now at the current price, but
I would agree.
I don't think it should be more. It shouldn't be above like 22, in my opinion, but that's just me.
Yeah, no. All right. Well, thank you guys for tuning in. We'll see you guys in the next one.
Thank you.